My superstar panel with me now, market bear Lee Munson, market bull Michael Lee. So Lee, first to you, how overdone is today's selling?
You know, I think it was a great day. We did some buying for clients that brought new cash in, but it's not overdone enough. I'm not ready to do a global rebalance where I'm going to sell bonds and buy stock. We still have some downside, I think, that we can see over the next couple months. Because remember, we've got peak profits in America. We've got peak consumer spending. I mean, look at the auto numbers. How can that sustain when you're doing 7-year auto loans? And then you've got a dollar that just won't stop going up. I think by the time the dollar stops rising, maybe the end of this quarter, maybe the next 3 to 6 months, but before the end of the year, that's when you're going to see the damage be done, and we can start buying, rip it and grip it.
All right, Michael Lee, you are our market bull. So we even heard our bear Lee Munson say they did do a little shopping. What looks best to you? What should investors consider as buying on discount today?
Well, you saw not only Lee, but a lot of other people buying around 330 and coming in, and we closed off the lows. I think I don't know that we'll necessarily see that tomorrow, but on all these dips, I would be a buyer. I'm very positive on the U.S. economy and the U.S. market, particularly the S&P 500. Look, there are problems in the rest of the world, but the U.S. consumer is on fire. The U.S. job market, if you look at the 4-week rolling average of the weekly jobless claims, you're at the lowest level in nearly 40 years. If you look at the JOLTS number, the job opening and labor turnover survey, the highest in the history of the survey's existence. So we have a super healthy consumer. The U.S. economy is just starting to heat up. And the only reason the Fed raised rates is because they had to. And I think they're a little bit behind the 8 ball. We're going to get some more rate raises. And behind that, I still love the banks. So these big banks, you can come in and you can buy them on these sell-offs. I think it's a great opportunity. You know, I think we're in a situation like 94 and 95. We're still churning through these rate raises, and once we get to the other side of that, financials have historically led big up rallies of the market, and I don't think it's going to be any different this time.
Okay, so Michael Lee, you like the banks. I know that well with this idea that the Fed is raising rates. But Lee, what do you make, first of all, about Michael's comments about the labor market? There are many people who say labor market participation rate is at the lowest since the late 70s. So many people have just given up finding jobs. What does that mean paired with some of the other indicators you're seeing?
Well, employment is a lagging indicator, number one. And so you're always looking in the rearview mirror to see that things did improve. And then when you add that to the formula of the Fed raising so late in the game, I mean, my God, it seems that we're already in the recession. So I think that with that lagging indicator, employment is full as it's going to get. Participation rate is not to be scoffed at. But furthermore, just the concept that we're depending on the consumer and large cap U.S. stocks, the one place where we have the richest valuations and where we're hitting declining profits going forward, I don't see how that makes for a great philosophy for 2016.
Lee Munson, Michael Lee, glad to have you both. We need the bull and the bear points of view. Grateful for the time.